afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined today by Ed Carson. Wow, what an end to the week. We got bullish gains for the major stock indexes after a flurry of institutional selling earlier in the week. We'll get into the stock market action today, but first we'll throw it over to Ed, who's got three stocks to watch today.
Yeah, we're going to take a look at Netflix, Datadog, and Mosaic, three stocks that have been showing relative strength and looking pretty strong in a weak market.
Okay, very good. Well, let's kick things off with by looking at a Thinkorswim chart here from the TD Ameritrade interface. This is a look at the NASDAQ composite. And Ed, why don't we just talk about the price action? Well, we had three rough days before today, but nice gains for the NASDAQ today.
Yeah, I mean, just to put in perspective, I mean, like we came through the 50-day line on Tuesday. We undercut the September 20th lows. The S&P did that earlier today briefly. It was a nice bounce, so that's good. We actually went into correction because we had undercut the lows of the September 20th lows, and the leading stocks were continuing to deteriorate, and the volume was picking up. These were some pretty heavy volume days, as you were talking about institutional selling. So today was a bounce, but the volume was well below average, at least on the NASDAQ. I will see what the final readings is on the NYSE, but that wasn't running strong either. This is one day. I would just caution that it's one day. We'll see what, we need to see more before, you should get too excited about this.
Market needs to prove itself more. You can see those moving averages. The NASDAQ is still below a lot of those moving averages there. So one day of strength does not a new rally make. So, and you're right about the volume. NASDAQ volume was quite a bit lower than what we saw on Thursday. NYSE was also lower, but not by as much. So, all right, why don't we flip over to the MarketSmith charts here, or unless you want to look at a weekly chart for the NASDAQ?
Just want to put in a weekly, going to put in the perspective that, you can see we're still in that downtrend. I mean, like we recovered somewhat, and so that's nice, but this was a bad week, and especially with a lot of the leading stocks that we follow, but we'll talk about that later.
Yeah, definitely. Well, it seems even though we had a nice gains today, that 14,000 is a key level to watch. The Nasdaq's 200-day moving average is right around that 14,000 level. Remains to be seen if the Nasdaq's going to go down that far. Looks like we've had a pullback of about 7% so far off the highs, and day one of a rally attempt in light volume. So we'll see where next week takes us. All right, let's take a look at the S&P 500, which also ended with a really strong gain. It reversed higher. You can see the volume down there on the above average, but a little bit below what we saw on Thursday.
Yeah, and so definitely good to see this rebound. But you can just sort of see, like, have we broken the downtrend? We often talk about that with stocks. Do you want to buy it when get above the downtrend? We're not above a downtrend on any of these major indexes, really. And, just one day, we'll see. Look, and every a 1,000-mile journey, it begins with one step. Maybe this is the first step toward that big step, but you just need to see more strength before getting really excited.
Yeah, I mean, it looks for the S&P 500 to truly break out of its downtrend right now. It looks like a move at least above the 440 level would do that, and we're still a little bit away from there. All right, next up, we're going to look at the Dow, DIA, which also scored an explosive gain here, but still on a downtrend.
Yeah, and it's sort of been the weakest. I mean, it had the best gain today among the major indexes, but it's the one that's been below the 50-day line for a few weeks now. So not a whole lot of strength there.
Yeah, Merck, big gainer in the Dow today, along with American Express, which is still in a position for a breakout try. Let's finally end by looking at the Russell 2000 via the IWM. This is an index that actually held up a lot better than the other major stock indexes this week.
Yeah, I mean, all the major indexes converged. It was actually below its 200-day line, but it managed to get above its 10, 21, 50, and 200-day line, and all in one fell swoop. It's nice to get all that taken care of in a nice package deal. Just have to see, it's had struggled over the last several months, but it was nice to hear. And I just want to say, just quickly showing this on TNX, one reason why we had the rally today is because the treasury yields basically round trip their weekly gain. I mean, it's been trending higher, but there was a big gain this week, and basically we ended flat for the week. So all those treasury yields things, look, if yields keep on falling, that's good news for a lot of stocks, not necessarily banks, but we'll see if that can continue because that was obviously a factor earlier in the week.
That's a very good visual perspective because we know the market is moving on this 10-year yield. Technology stocks don't like it when they see a precipitous rise in the 10-year yield, and this is a very good perspective on the weekly chart here. As you said, it gave back a lot of gains this week and closed pretty much where it closed last week. So the market liked to see that, and certainly a big reason behind today's gains. All right, you ready to look at some individual stocks?
Let's do it.
I guess we're going to start with Netflix, which, well, a while ago, it looked to be like one of the worst performing FANG stocks, but now it has really taken a leadership role in the FANG group.
Yeah, it was hard to really feel that confident over here when it was coming up because, yeah, we've had this a bunch of times. And even when it got to new highs, well, it's had a lot of flops. I mean, just looking at a weekly chart, you can see it's had these moments where it comes up and then comes back down. It would have been hard to hold any of these breakouts. But now this past, it seems to be holding up a little better this time. And this week, it not only bought a video game, a developer, it also launched some video games in Germany, or at least in Europe. So, it's clearly moving into that area. That could be a huge area for its hundreds of millions of customers. It could be a big growth area for Netflix. Have to see it, but obviously, this one is actually in a buy area. We'd probably be more excited about it if it weren't for the darn market.
Yeah, well, the N in Can Slim stands for new, and we're very interested in companies that either have a new product or service that's fueling strong growth, or it might be new conditions in an industry. Seems like Netflix does have the new right now with their push into mobile gaming and their acquisition this week of a video game studio.
Yeah, and I just one point is the relative strength line. While it's not at a new high, really it's moving up. Look at this; it's flat from where it was the stock, but the RS line is skyrocketed. It's really outperformed in the past few weeks. Even when it was falling, it was starting to rise. That was showing you how the market's been weak and also how Netflix is outperforming there.
Yeah, and you can see why its accumulation distribution rating of A minus is as high as it is. You look at all the recent price gains and look at all the volume that has come when the stock has been rising in price. It's generally been rising in heavy volume and falling in relatively light volume. So Netflix's technical picture looks pretty strong here. All right, moving on to an enterprise software firm. I'll tell you, while a lot of enterprise software stocks in 2020 were going gangbusters, kind of Datadog, started to rally, and but now it has really, just looking really strong here as it holds above its 10-week moving average. Another stock showing resilience in this market.
Yeah, that was nice. I mean, the volume on the way up the last few days hasn't been the greatest, but look, it bounced off its 10-week line when all the major indexes are below that. I mean, a lot of stocks came to it and they struggled this week. So this was a growth stock that rebounded. We would have probably been talking about it more as a buying opportunity, but it's just sort of like when the market's sort of falling off. But this is the thing, it's like, it's not necessarily that you want to be buying some of these stocks, but look for these stocks with the relative strength lines at or near highs that are rising. These are the stocks that may outperform when the market is clearly in an uptrend again.
Yeah, there's a fair number of them out there, at least with relative strength lines that are at near highs. Netflix, we just looked at, Datadog. How about Mosaic on a very good day for fertilizer stocks? These stocks have been doing well. Then they came under some selling pressure, and Mosaic has worked its way nicely higher here.
Yeah, had an almost handle. Needed a couple more days for that to happen. It was nice to get some sort of pause. But yeah, the relative strength line is back up towards highs. I suspect that, this would have been the best day to buy it. But again, it was a little tricky with the market at times. But even so, this was nice, nice volume after a light volume pullback. There was a lot to like about it. And as you said, a lot of the fertilizer stocks are doing very well.
Yeah, you're right about that little trend line breakout there. It's always good to get an early entry in a stock, and that was a pretty well-defined entry when it crossed that recent high of 34.45. And Mosaic is looking good here, as well as a few other fertilizer stocks that moved nicely today. CF Industries was another nice gainer, probably the strongest performer in the group. Good volume behind today's move, so some positive action in the fertilizer space.
Absolutely.
All right, Ed. Well, we have we have bullish gains today, lighter volume. What's the best course of action right now? What are you going to be doing over the weekend in terms of stock research, and what should growth investors be doing here?
Well, as I said before, like, I think looking for stocks that have strong RS lines and making sure you have a wide base, because we know that some energy, the fertilizer, and some banks, travel stocks, there's definitely some sectors that held up reasonably well, and there's some growth stocks that are doing well as well. So do that, and keep your exposure low. There's nothing wrong with being all in cash in a correction, and or just having, maybe just some long-term winners in there, because it's psychologically damaged too. It's not just your capital, it's your mental capital. If you get in there and you're constantly nickel and dime, and then you realize, what was I doing here? And you can get weary and exhausted. And then if the market turns up, you may not be psychologically ready to take advantage of that. So, it's the money is to be made. The money should be made in a clear uptrend. It's very, very hard. It's almost impossible in a correction. If you guess the bottom, you're great, but good luck on that. Just do your research, build up those watch lists with the high RS lines, and wait for clear signals of strength.
Yeah, well, in the end, it was just really an initial rally attempt for the market today. So we could see a sign of strength in the indexes next week that could be enough, to turn positive again on the market and give us a signal to start to wade back in. But we want to wait for that to happen, and above all else, make sure that there are actionable setups to take advantage of. So with that, Ed, I want to thank you for your analysis and insight. Appreciate it very much. And we'll be back here tomorrow for another edition of Stock Market Today. I think it'll be Ed and Allie. In the meantime, have a great rest of the day. Have a great weekend, and we'll see you back here on Monday.